Google, what are you doing to me? You're tanking my Canadian investment portfolio. My tax-free income in perpetuity for the rest of my life only generates that tax-free income if I'm up on the friggin' stock. And here we are, down 13% in this account. I got 58 shares there in my corporate account. I got another 55 shares, let alone what the wife holds. I mean, it's one of the most sized positions in our combined accounts, and I'm getting clobbered. I mean, thank God we cost averaged, and I just didn't buy the entire tops of Google stock as it's retesting its annual or its yearly low. But I do want to point out that Google right now is trading for the lowest valuation that it has in its entirety of being a publicly traded company. I mean, you can take a look at it at a 17 price to earnings, forgetting what the forward-looking valuation is. I mean, the last time it traded at these values was back in 2012, yet this is one of the fastest periods of growth in Google's history as a publicly traded company. So why are we dying? And is this the buying opportunity of a lifetime? And what do I plan on doing with my shares? Will I cut some losses? Will I buy more? Well, if you are on a path to financial independence and you damn well one day want to retire early, let's do this together. Hit that subscribe button, folks, because we're going to take a listen basically from the article that's driving this. And we knew this was going to be a defining factor to the volatility in the stock when it came to this court case, basically Google being fined for monopolistic behavior with Apple, and that court case brought out some light that is concerning to investors, and we knew without certainty that this could drive some volatility. So take a quick listen.
Trading at Market Flash on Alphabet, which is down almost 5%. Let's get to Steve Kovac. Steve?
Yeah, Carl, this is off comments from Eddie Q. He's the head of services over at Apple. He's testifying right now in that DOJ trial where that Google already lost. They're trying to figure out the remedies here. But he said, according to several reports we're getting in, that searches in the browser using Google, obviously, fell for the first time in April. Now, the reason why Eddie Q...
Now, I'm a little bit confused when he says search browsers in Google dropped for the first time yet. We've had some mixed reports on that, and I wish I could find the exact quote myself, because what I've read on Wall Street Engine and what people were sharing is that basically Apple says that Safari searches declined for the first time in April and admits he's lost sleep over potential hit to revenue sharing deals. And, I don't really know if they said, because obviously Google's been losing market share. I mean, we've known that for a while now, and the only really stats we can pull from our global stats, and we've known that it's been a slight decline, but this doesn't take into consideration perhaps some AI search through ChatGPT, because we're just looking at Bing, Yandex, Yahoo, things people probably aren't materially using anyways. But the reality still sits that hundreds of millions of users a month are still using Gemini, and it doesn't really get brought up in the topic, but I'll hit on that in a moment.
He was here testifying is because Apple collects up to $20 billion a year in payments from Google to be the default search engine when you open up your Safari browser on your phone and start typing in a search. That every time you do that, Google gets a revenue share from that. And now he's saying Google searches in that bar have gone down. And this is obviously a bad sign for Google as we talk so much about artificial intelligence eating into the market share. According to these headlines that we're getting, Q also said that they're looking at AI search alternatives within the iOS ecosystem, and mentioned by name companies like Perplexity, that AI search engine we talk about so much, and also Anthropic, a rival to ChatGPT. Obviously, ChatGPT is already integrated into the iOS system, although it's part of Siri, doesn't really do search as straight up as Google does. It's not also in the Safari browser. So look, you see shares down 4.6%.
So when it comes to Gemini specifically, I think what's going on with the discussions of AI alternatives is that Apple has kind of been dealt a forced hand here, because Apple, I think in the same comments, somehow stated that Google is still the superior product. But what ends up happening is because they're getting fined for this monopolistic behavior, they do have to offer these other alternatives. The first step Apple made was that you can go into the default settings and change what default browser you want. But the reality is that they have to force other search browsers onto Apple, which people are pretty lazy. Would you still go out of your way to use Google? And when billions of people are utilizing their iPhones, what does that mean for Google search? I mean, this is the uncertainty that has been driving a lot of concern, yet these last few quarters of earnings, ChatGPT's been around, and it really hasn't hindered all that search growth, or at least Google being able to maximize profits on search marketing. It really hasn't taken a huge share away from them, right? So that's what alleviated some of my concerns, but I understood without getting certainty on the fines, if they have to split up part of their company. Until we get certainty on any of that, Google's going to continue to probably be a low valued company that investors don't take into consideration the vast scope of value that they have beyond just search. So let's discuss just that. What if I told you Google not only already integrates AI answers into its search results, but is far more than just a search engine itself? And we already know Google's a leader in AI, hundreds of millions of users on Gemini a month, but I want to talk about the actual revenue share and this game of chicken that basically investors are playing, where how long can we wait while the other aspects of Google business, the other aspects of their business surpass search and become the dominant factor. So even if search gets hit, it's not that big of a material impact. Right now, it's like a 50-50 split between all their other businesses in search. But I want to talk about the growth here, because as of the last quarter, Google did 90 million. To put it in perspective, in the same quarter of 2024, they did 80 million. But let's backtrack a little bit and just take a look at this. This is total revenue, by the way. If we go back to basically the Christmas quarter, they did 96 billion, which was 10 billion more than the Christmas quarter prior. And that's always a busy season because people are marketing products during the holiday season. But if we go into the fall season of basically quarter end for September 30th, you can see they did about 88 billion. And regardless of what quarter you look at, this company is growing at an accelerated rate, which is, again, absolutely insanely mind-boggling for a company not only buying back like 4% of their float, paying a 0.5% dividend. Everything this company is doing is like, holy crap, this must be the cheapest company on the planet. And it is the cheapest S&P top 10 company. And what blows my mind is considerably this company is worth more in its parts, which is why if the DOJ breaks it up, depending on what they choose to break up, and if they have to spin it off into another public traded company, we would only benefit more. And if you take a look, YouTube is still the primary source of my attention. You could talk about genomics, which was brought up in that court case. You could talk about, self-driving and all these other features this company has, and cloud. I mean, look at cloud growth. Like, cloud growth is disgusting. We're still in the September, and let's go back to the recent quarter. I mean, cloud growth alone, it went from 9.5 to 12.2 billion. Like, it's disgusting. But YouTube, to me, I think is a defining factor to how we could value Google and why it's probably still undervalued. Google's YouTube is growing at about a 10% clip. Which isn't, a small growth. I mean, it's a sizable growth. We compare that to Netflix, which Netflix trades at about a $500 million valuation. Netflix right now is growing at about a 10 to 12% growth. They're forecasting about 15% for Q2, but 10 to 12%, it falls pretty in line with YouTube's growth rate, and it has very similar revenues. The revenues are slightly higher. Netflix is doing about 10.5 billion for the quarter. YouTube doing just around 9, so they're doing about $1.5 billion less, but still very comparable growth rates. And YouTube doesn't really have to pay for any of its content, but I keep forgetting that it does have to share that ad revenue, which basically brings into what are their actual margins. And YouTube has about a gross profit margin estimated to be around 38%, which is still far superior to Netflix. Not their operating margin, their profit margin, that bottom line that gets hit. Basically according to Yahoo here, that their profit margin is about 23%, so it's about 30% lower comparable to that of YouTube, because YouTube's not paying to create that content, which is clearly a more costly business. So you can kind of see that, YouTube might be growing slightly slower, has a little bit less revenue and comparable, but the profit margins are superiorly higher. I would say that these are very comparable businesses, like one-to-one, very comparable in the media space, and they should be trading for roughly the same values. But as we just discussed, right, if you take a look at Netflix value today, it's trading at about $500 million. So how can you not say that YouTube shouldn't be worth $500 million, which means that would be currently, 1/5 or about 25% of the totality of Google's market cap. Yet if we actually take a look again at Google's total revenue here, it's 90 billion, and YouTube isn't even 1/10 of its total, revenues. So there's a 1/10 difference in value that YouTube should be providing, in my opinion, to Google's market cap. This is why I keep saying that Google should realistically be the largest company on the planet. It's got comparable profits to Apple. It's growing quicker than Apple. It's got higher margins for the most part. I mean, everything about this company is showing that all cylinders are continuing to run on the back of this AI search concern. And now this Apple DOJ lawsuit is the next and I think final nail that we need to get through to offer enough certainty to get to that next growth phase in the future. Now, Google's one of those stocks, guys, where I just want to buy it, turn everything off, just don't even look at my accounts, and come back in like 5 years and just see how it worked out. Because one growth vector for this company, like self-driving, genomics, Cloud computing could completely transform this company into a new growth phase, and even YouTube for that matter. Still, like, I wish they would spin YouTube off, because its value is not justified trading in this company. This is why I think people are missing. I mean, again, look at Tesla. How can all these companies like Palantir pull forward so much growth and we can't get a hint of it out of Google? And it just shows you the concerns over search dominance. And if we do get a revenue hit like we saw through 2022 that hit earnings, I mean, that could happen and it could be a bit detrimental, but I still think it's short-term lived, and it could affect the earnings per share. And it's why the price multiples are dropping, because if earnings get hit, the price multiple might be actually significantly higher. So we could say it's trading at fair value if we're just looking at PE values. And that seems to be the only thing people care about with Google, none of the future growth aspects. So these are just my opinions, but I'd love to know what you think about Google. Are you buying it here? Are you not touching it with a 10-foot pole? I am perplexed by the stock at its current value, but let me know what you think. I'd love to hear about it.